Gold could see a 5% gain this week as weak US jobs data shifts market expectations. And hold that thought for a second. Let me present everything backed by data. And things can change. Narratives change real quick, and then you have manipulation and whatnot. What I'm going to present today in this grid report is precious metals, silver, and gold specifically. The precious metals market sentiment is cautious to bearish after a difficult first half of 2026, driven by Fed rate hike fears and a strong US dollar, with gold posting its worst quarter since 2013. However, some analysts see the sell-off as a potential setup for a Q3 recovery, creating a mixed but opportunity-aware tone. Investors should adopt a cautious but selective approach, focusing on high-quality streaming royalty companies and innovative producers with strong ESG profiles. Monitor central bank signals from the ECB forum closely and consider using the current downturn to build strategic positions in gold and silver for a potential Q3 recovery. And before I dig deeper, check this out. Gold heads for weekly gain as weak US jobs data tempers rate hike bets. US non-farm payrolls rise 57,000 in June. Miss expectations. Spot gold prices hold above 21-day moving average. All precious metals head for weekly gains. And not only that, look at this here. Government likely to announce revamped gold monetization scheme. The central government is expected to announce a revamped gold monetization scheme according to sources aware of the matter. The official announcement is expected within the next 2 weeks. Sources expect this move to mobilize over 1,000 tons of gold. Under the proposed framework, jewelers across the country may be included as collection partners in the revamped scheme, enabling them to aggregate household gold deposits. Earlier, only banks were allowed. Let that sink in. This is pretty massive. Let's see how this plays out within the next 2 weeks. And like I said, things change so quick. India's goldsmith and jewelry bodies have urged the government to revamp the scheme as they seek structural solutions to reduce gold inflows without impacting the domestic demand or livelihoods tied to the sector. Even if 5% of Indian household gold is monetized, it could lead to liquidity of up to 90 billion, said analysts. And today, gold is trading at $4,171, which is very decent. Look how things have changed. But again, don't get me wrong, it's still down from its all-time high. And silver is sitting at $62.42. Silver surges on weak US job data. So again, inflation, rate hikes, and jobs data are some of the key factors for these movements. And before you start judging me, these are my current holdings. Yes, it's real. You can see I hold quite a bunch of miners, and I had to trim. I'm going to get rid of a couple of these from the top and get into some of the big ones, producers, streamers, etc. So yes, I am a strong believer of precious metals in the long term. Now, keeping all this aside, gold and silver recovery stocks for H2 2026. After a period of decline, analysts are identifying specific stocks that may benefit from a rebound in gold and silver prices. This suggests a cautious but opportunistic outlook for the sector. Return precious metals, potential 30% annualized return strategy. This analysis suggests that despite the broader downturn, some streaming and royalty companies may offer attractive income-generating opportunities through option strategies, indicating selective bullishness. 1 day ago, gold and silver charts forecast more stormy weather ahead. A little bearish news. Cautious, I rather say. Chart patterns indicate that the recent turbulence in precious metals may not be over, adding caution for short-term traders and reinforcing the need for a defensive strategy. If you believe in the long term, nothing has changed. But if you're trading short-term, be cautious. Let's talk about gold real quick. Overall sentiment in the gold market reflects a cautious optimism as investors react to mixed economic data. The potential for fluctuating interest rates and economic performance poses a significant risk to gold prices in the near term. Again, pay attention to the words near term, mixed economic data. The continued purchases by central banks indicate a strong belief in gold stability amid uncertainty, presenting an opportunity for strategic investment. Investors should closely monitor economic indicators and central bank actions to inform their gold investment strategies moving forward. Gold heads for weekly gain as weak US jobs data tempers rate hike bets. This situation illuminates the correlation between economic indicators and gold prices, indicating that macroeconomic factors will remain key for investment decisions in gold markets. Central banks are still betting on gold. This indicates a strong institutional belief in gold's value amidst economic uncertainty, which can enhance demand for gold in investment portfolios. Gold price jumps above 4,100 as US economy created 57K jobs in June, which is way below their target. And here you go. Emerging signals. Government likely to announce revamped gold monetization scheme. This shift could present opportunities for investors to capitalize on improved accessibility and transaction dynamics in the gold market. Why are central banks buying so much gold? 90% institutions cite this reason. Investors can leverage this trend by positioning themselves in gold as a hedge against potential market volatility. The surge in central bank gold buying signifies a pivot towards stability and security amid global uncertainty. And let's finish it off with silver. My precious. Sentiment has turned cautiously bullish for precious metals following a weaker than expected US jobs report that has pushed back Fed rate hike expectations. If you have a weaker economy, Fed may not be hawkish, with gold and silver both posting significant gains in the last trading session. However, silver's 49% decline from January highs underscores extreme volatility and lingering bearish pressure from earlier in the year. The risk of further Fed hawkishness remains if inflation data surprises to the upside. So you have the inflation. On the other side, you have weaker jobs data, basically. Fed is in a very tight spot right now. Monitor the gold-silver ratio for continued compression as a tactical entry signal for silver longs while maintaining stops to manage the ongoing high volatility. Watch for upcoming CPI data and Fed commentary for confirmation of the dovish pivot. Gold and silver surge on weak US jobs data. This is the key point for the surge that we are seeing right now. By the way, let me finish it off with this. Trump's Big Beautiful Bill Act has clean tech silver lining. Policy-driven clean tech expansion could increase industrial demand for silver, which is a key component in solar panels and electronics. This represents a potential long-term demand driver beyond precious metal investment. Ladies and gents, this is all I have in the grid report. If you like what you see, please subscribe and I'll keep you posted with all the latest stuff. Thanks for watching and I'll see you in the next video.